what if the masses were wrong? What if people expect this rally to continue to last, but what if we're going to see another dip and another dip and another dip, and we keep dipping, and we suddenly see a correction of 50-60%, and we are up for another bear market, potentially for half a year, maybe an entire year? This is what nobody is expecting, myself included. But we have to play devil's advocate, right? We have to work actively against our confirmation bias. If everybody around us thinks that we're going to continue to rally from here, we've already seen a correction, then maybe everyone is wrong. Maybe we have to re-evaluate our thesis. Why did we correct in the first place? Why aren't we just going straight up since the Bitcoin ETF demand continues to be stable? Why are we even seeing that correction? I believe it's partially because of too much optimism, because of too much leverage in the market. We can look at the financing cost of leverage in DeFi, right? We can look at how much does it cost to borrow Tether? How much does it cost to borrow USDC? How much does it cost in order to lever up your exposure to be more exposed to crypto than usual? What we see is that the borrowing rates are actually quite high now, right? One might expect that the borrowing costs in crypto should be similar to the borrowing costs in traditional finance, right? Because otherwise you can simply just use arbitrage. You could borrow in traditional finance, deposit that on a DeFi platform, and make up the difference, right? You could borrow, say, for 6-7% with a bank, and then deposit this in DeFi, make 12-15%, and you've got free return. Return you haven't really worked for, return with very little risk, right? There's only the DeFi platform risk, but there's a lot of DeFi platforms that are pretty safe, right? There's Aave, there's all kinds of Web3 platforms that do not appear to go down anytime soon. And so why are we currently seeing that spread in reality? Why do we currently see that financing costs in Web3 are much higher than in the traditional world? It's because nobody can close that gap fast enough. There's not enough people that borrow money and deposit this in Web3. And so there's simply not enough liquidity. That means, in turn, there's simply a lot of demand to get all of that exposure. Way more demand than usual. Potentially also short-term demand. And so why are we correcting? We are correcting because every little move to the downside brings a lot of liquidation fees for the very massive whales. So we can't just go straight up. We have to see our corrections. And the question is, when will the correction stop? Because long-term, it still appears we are relatively healthy, right? We see the long-term Bitcoin ETF demand. We see roughly 7-8% of the entire Bitcoin supply gets currently bought up, annualized at the current purchasing rate. So we do know that demand is healthy. We also know that supply gets cut in half. So all of that long-term should be fine. But still, we see those massive crashes. And that's simply as long as there's too much borrowing, as long as there's this financing gap, we might come even further down. Simply because there's too much risk and it's too profitable for the whales to temporarily dip down, to temporarily sell off and get those liquidation fees. Because then, once people get forced liquidated, the price goes even further down, it wicks down, and then you can also take advantage of these lower prices and buy those dips.
Here are the videos that work on YouTube. XRP will be $12,000 guaranteed, or an AI explosion, top 3 cryptos to buy in November. A lot of pushing of greed, that's what gets the clicks. What doesn't get the click is a tutorial on how to make backtests, on how to build those sheets that in the end figure out what historically worked well in the past. The backtest that I often show here on this channel. I still very much enjoy producing this kind of content though. I also share these kinds of sheets, but I don't do it on YouTube. You also get direct access to me. Feel free to check it out. It's thebitcoinstrategy.com.
Now, isn't it interesting how strong the volatility in Bitcoin is? Isn't it interesting that it can still, with the current market cap, dip 10% on a single day? Isn't that kind of counterintuitive given how many billions and billions of dollars are currently locked up in Bitcoin? Why can the price suddenly crash down like this? It has to do with volatility. So the price movements work in both directions. They shoot up very quickly and they crash down very quickly. And that's because a lot of the Bitcoin isn't actually liquid. A lot of the Bitcoin is simply just held in long-term diamond hands, somewhere stored in a hardware wallet, somewhere in a cold wallet where it won't get moved that quickly. So only a small fraction of all the Bitcoin actually moves every day. Thus, it doesn't take a lot of sellers. It doesn't take a lot of buyers on the margin to push up the price or to crash the price a lot. It's similar to the property market, right? You've got 100 houses on a street, and then maybe 2 or 3 houses in that street suddenly have to get sold off. Then the comparables for all the other 97 houses also drop. So the market cap is suddenly dropping massively just because of 3 transactions for the other 3 houses. And Bitcoin works the exact same way, right? You don't need a lot of Bitcoin to change hands. You don't need a lot of Bitcoin to sell or to buy in order to move the prices massively. That in turn means we're going to continue to get that volatility. We're going to continue to see those crashes. It's not unlikely that we'll see top to bottom another 60-70% crash in the future. But that also means because of that very illiquid supply, that just the marginal buyer pushes up the price much more. In other words, the ETF demand, if it continues for a long time, is also going to push up the price a ton. So yes, it's only 8% per annum that gets purchased by the ETFs right now at the current rate, but the price is likely going to go up way, way more than 8%, because an 8% demand-supply imbalance is like buying up 8 houses in that street, right? 8 out of 100 houses get purchased every year, and so the price of all of those other houses will not just increase by 8%. It's likely going to increase much more, because of every marginal purchaser, with every purchase of another house, the price might go up another 10%, 20%, 30%. It depends, of course, how much the price increase in the end impacts the long-term holders, whether or not the long-term holders are willing to sell for that higher price, or if they simply just continue holding and watch the price further go up. That's why I like to look at those on-chain metrics, right? I like to look at the value days destroyed. I like to look at the market value to realized value Z-score. I like to look at those kind of things. You can find them all at lookintobitcoin.com. Right, so lookintobitcoin.com. There's all kinds of interesting charts. Check out the value days destroyed. Check out the market value to realized value Z-score. And this gives a very good hint when potentially long-term holders might be selling, or when potentially too many people are in profit relative to the current market volatility. So I don't believe either that we have already reached the top. I took some profit recently, but I don't believe that we have reached the top. I do believe, though, that there's more volatility than most people are aware of. I do believe that we can easily drop 30-40% from the recent top. It's totally possible. It has happened several times in the past. The realized value or the realized price is still much, much higher than the current price. So profit taking will happen. People want to balance their portfolios. People don't want to be 80% in Bitcoin. Even though they like to dollar cost average into Bitcoin, you don't want to necessarily be 80% in Bitcoin. You want to also have some stock, maybe some property. You want to have a balanced portfolio. You don't want to necessarily go down those 70-80% crashes. And so because of that, there will always be profit taking because of the volatility. And so that profit taking in turn creates more volatility. It's a natural cycle. It's totally to be expected. And we simply just have to take advantage of those crashes as they come. And we need to be flexible, right? That's a nice thing about having a diversified portfolio. You can always take advantage of those crashes once they happen, because you do have a lot of money, say, in stocks that you can then sell once Bitcoin crashes. So those corrections are by no means a problem. They are opportunities. It would actually be quite interesting just mentally how people will react to this in case we're actually seeing a triple top, right? We've seen the double top before. You went through a bear market for a year. If we see now this third top very close to the other 2 tops, and we're not suddenly doing a 2 or 3x from the prior top, that's a totally new structure in the price. It's something that has never happened before, and it's definitely something that might require some remodeling, especially for the people that just look at prices and not at on-chain metrics. So I'm looking forward to write that bull market with you. I'm looking forward to even write this dip with you and buy through that dip. If you want to join on that ride, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. See you next time. Cheers.